Let's talk about this historic day. We go SBC, UBS takes out Credit Suisse, and here we are. Was this because of greed? Was this because of the absolute demand to create revenue? We don't care what the quality of the revenue is going to be. We just need to get new revenue. Is that what happened to your Credit Suisse?
Well, I didn't officially cover Credit Suisse, but I can comment on the European banks, which has woefully lagged the U.S. banks. And some of this is structural. After the global financial crisis, they did not recapitalize at the pace of the U.S. banks. And some of this is simply cultural, which I lived through. And it was sometimes growth at any price, growth at, extraordinary risk. And so I'd say there are some culturally flawed European organizations, several that I worked at, but it's played out through the numbers, and it's relevant to my analysis of the U.S. banks now because Goliath is winning, and the Goliaths are the largest U.S. banks.
Is Mr. Armati in his red lines going to be a change agent? And can Mr. Diamond, with a completely separate issue, this Epstein scandal, be a change agent towards a more discerning choice of clients?
Well, know your customer is banking 101, and I don't deal directly with, say, the investment banking clients, but I have a compliance exam several times a year, as does everybody on Wall Street in the United States. But there might be more restrictions on which clients you're allowed to take, so there's going to be an extra check, and so it's not all clients come to us. It's going to be a smaller subset of what you deal with today.
You said Goliaths are winning. Are the smaller banks losing? Just putting aside Europe.
Yes. We conducted an analysis. We did a kitchen sink analysis where we had 4 haircuts. One haircut was deposits leave by another 8% in the industry. Another haircut would be provisions equal to a recession level. Extra expenses for new regulation. And we have the Fed funds rate go all the way down to 2.75%, which would hurt the net interest margins. Regional banks get hurt by 25% to earnings. Large banks get hurt by maybe 5%, 10%. So Goliath is winning, and Goliath is winning even more. But I wanted to make one clear statement today, and that relates to actually the regional banks are making some comeback. And so the statement is that the detour...
cheesy. Carry on.
Okay, well, I'm cheesy. I have my props. But the detour for not owning bank stocks is over. So
for those of you, it's like in construction. For those of you on the radio, he's got, give me that road sign over there. Bring in a stop sign next time. Mike, stop. End detour is what he's saying on radio. It's one of those orange. It's one of those orange signs.
No.
It's like the real sign. What did you do? Steal this off the construction sign for the Bloomberg?
How's your head, Tom?
No, he stole this sign off the construction side of the Bloomberg pothole at Lexington and 58.
All right. The prop aside, I am wondering why now? Because you talk about this potential 25% hit to their profits. This is significant. Are you basically just saying it's priced in? We've priced in all of that and then some. So it's time to hoover up some of these smaller stocks that have gotten beaten up.
Well, when I say the larger regional banks, look, they're not going to zero. You had your failures from idiosyncratic events. They're not raising equity, at least the largest banks. Look, you've had 3 banks that were in the S&P 500 at the start of the year that failed. Okay, that's done. All right, so this idea, this almost hysteria as relates to the largest banks is over. And it's been over for the last 4 weeks. I mean, the banks have gone up by over 10% during that time. They've outperformed the S&P 500, but they've no way caught up to the broader S&P 500. So you're saying what could have legs in the market? Bank stock, the larger bank stock certainly could, like a U.S. Bancorp, which has been pummeled. And it's one of the highest quality banks out there.
Although, in fairness, they haven't gotten pummeled as much as some of the others. And I do wonder, I get your point with those particular ones. Do the largest mid-sized banks hold up, even if you get additional failures on the lower end at a time when the emergency lending facility at the Fed is still being used at a pretty significant rate?
Well, I'm going to avoid your question just for one moment. There was big news last week, and I think the one outlet that really picked up on it was Bloomberg. There was over $10 billion of debt issued by the large regional banks. It was the first issuance since the failure of Silicon Valley. It was 4 to 5 times oversubscribed, and the spreads came in pretty well. So for those banks, yes. Below that level, below the level of the top 10 banks, it's still to be determined how much wherewithal they'll have to access the debt markets. That hasn't happened yet. So you're right, there is a divide. Goliaths are winning. The next level down is tap the markets. Below that, it waits to be seen. And once you get past this acute stage, you still have a recession with commercial real estate. And most of the commercial real estate loans are for banks below the top 10.
Move the decimal point, Mike Mayo. Citigroup, after a 10-to-1 reverse split way back, $4.83, which is basically unchanged from 2009. I detect some Jane Fraser moves. They seem to be consolidating and simplifying the process. What does the next Citigroup look like?
The next Citigroup looks a lot like the old Citigroup before the merger in 1998. So this is Citigroup's silver anniversary.
This is gospel, folks. This goes back to when Mayo was canned at Credit Suisse. Continue.
And so this is Citigroup's silver anniversary. It's their 25-year anniversary, and it's certainly not a cause for celebration. The stock's down over 3/4 at a time when the stock market's more than tripled. They failed on almost every measure.
What is she doing different? What is the courage she's doing right now to get them back to John Reed?
Well, she's simplifying. You know, the old adage, Tom, is that global banking, wholesale banking is global, consumer banking is local. And that even predates this merger. This goes back to Walter Wriston. And we're talking about a 50-year failed strategy where Citigroup thought they could go ahead and, have a customer in Hong Kong whose kids go to boarding school in London and they vacation in Aspen, and we're going to serve that
like
super...
Lisa's life.
What's that?
No.
It's like Lisa's life. Lisa, get one more
I think
question
Lisa's
in
life.
here.
So anyway, that's failed. She's reversing that, going global with wholesale and getting rid of the non-U.S. consumer.
You dodged one thing, so I'm going to come back to it just real quickly. If smaller banks start to fail again, are all bets off with the largest regionals?
The smallest banks are not systemic. There's over 4,500 banks. You're going to have bank failures. That's a rule of banking. But it's not going to be any bank in the S&P 500, in my view, over the any immediate time frame. So that phase is over. It's this idea of Tom, you can hold it up. The idea
Please don't hit your head again.
The detour away from banks has ended.
Right.
If we can.
Okay, we got 20 seconds. End detour. End detour. What's your single best buy right now?
I'm going with J.P. Morgan and Citigroup as my top 2 picks, but I'm also adding in there right now U.S. Bancorp, which has been relatively pummeled given the quality.
Should have hit him on the head.
No.
Mike Mayo, thank you so much.